Hi and welcome to the Market Alert for Friday the 7th of July 2023. So good job news sparks, bad data battering for bonds, big tech, banks, bullion and Bitcoin yesterday. And US stocks and bonds were hit as hot data added to the hawkish impulse. I mentioned this yesterday that we have to see rates continue to move higher. The news that they're talking about yesterday was the ADP numbers. They came in very hot. As you can see, they're forecast at 226, coming in at 497. And today, of course, we've got the non-farm payroll numbers. They're the big one for today at 130, 224,339. That looks a bit of a coincidence, doesn't it? What did we have for the ADP yesterday? 226. Interesting. And it's a similar number. So, 224. Is the forecast. We'll see what they come out, but certainly the ADP numbers yesterday coming in at 497 was more than double the actual forecast. So it's going to be an interesting one at 130. It could be a damp squib as well. We've had this before where you think, oh right, the market's going to put out a massive number and it's going to fall apart, and then it's not. And the market goes the opposite way, so you have to trade what you see, not what you want to see. What else have we got today? So it's all US average hourly earnings, non-farm payroll, unemployment, and then we've got the criminal herself, Lagarde, speaking at 5:45. Okay, let's move on. Have a look at the markets. Kick off with the Dow, see what happened during yesterday if you've not already seen it. So in the Dow yesterday, we see the market trading down to 78% retracement, which we had marked up. We took out the 5 bar the day before. We took out the 20 yesterday, and we've traded straight down to 78 and also sitting on the 50 EMA. If the market doesn't hold here, then we go down to 89, which is 33,700. And then we have this low here where we've got quite a bit of support, as can be seen there. So 33605 is the number for the recent low there. But overnight you can see that we bounced a bit, not a huge amount of selling, more shock than anything else. So the market down yesterday for the Dow for the whole of the session. In fact, let's just go from when we had the news down to the low. We sold off 306 points. They're obviously selling off a lot more from the high down to the low, 427. So not a massive move, just that the market was down yesterday. But overnight you can see we're nowhere near the low at the moment, and I suspect the market will hold above this until we get those non-farm payroll numbers at 130. Meanwhile, in the implied volatility, as I mentioned last week when we hit the 1001 being a historic low, if we move along to the monthly low, as you can see there, pre-COVID low, and we were due for a correction. Well, that looks like it has already kicked in. Wasn't expecting it so soon, but yesterday we saw the market dropping there, and the implied volatility spiking up to 11.88. If the correction continues on the non-farm payroll numbers, then you're looking for this number to go to around 20% to find a bottom, just like that we saw in March and also October. With Liz Truss, it went to 31 from 14. So 100% increase tends to find the bottom of the market's corrective phase as well. Okay, let's move on. Have a look at the German DAX. So the DAX came under a lot of pressure yesterday, got a right monkey hammer into the downside, as can be seen with the market taking out all of these levels here and also there as well. So yeah, an interesting one, a lot of weakness coming in there, and there was no European news yesterday, but for some unknown reason, big move to the downside for the German DAX. It just stayed on the downside, not a green bar in sight for the 30-minute chart, and the whole range from the opening of the futures down to the low was a massive 365 points, which is a rare event within the German DAX. The average is between 150 200 points, So a big move yesterday, and in fact when the news came out, it didn't even hold at the S3, whereas a 90% of the chance, or time I should say, the market will hold at the S3, but continue to career through this for another 200 points. But overnight, the market finding support at the close, the low down here for yesterday not being looked at yet. We'll see what happens when the futures open at 7 and the cash at 8. But the market finding just a bit of support there at the moment. In the 5-minute chart for yesterday, we started off fine until the US opened. The market in the futures stuck in a sideways range. We then traded up to the 50 bar moving average. We sold off. We saw them buy back in, as you see there, and the market retraced nicely. Let me just switch out tools here and I'll show you what I mean. So we traded from there down to there, coming back to 78% retracement, and then the market starting to make these retracement declines, as you see. And then we got to I'll just find it, the ADP numbers yesterday, and that set the DAX moving sharply to the downside, as you can see there, and it took a moment or two before the market actually bounced back there, but it continued to move down. You can see just the odd green bar before the market then resuming and turning red once more. Overnight, let's have a quick look. We can see that we gapped down and we filled that gap, and the market currently sitting at the close. Like I say, if this market moves lower to begin with, watch yesterday's low, as you'll find some support there. And trades for the week, let's just have a look. Create a quick statement. We're going for Monday, and then do this, and then let's create a detailed report. And there we can see that for the week we got a gross profit of 905, 68 loss, and 837. Got a massive profit factor for this week, 84 win-loss ratio, 84-16 win-loss ratio as well. Yesterday just staying with the trend to the downside. That's what made it a good day and boosted those profits for the week. And in the S&P 500, this down also, trading down to the golden ratio of 62% there. 30-minute chart, you can see the decline following the ADP numbers, sitting in a sideways range. UK FTSE as well, taking out the lows that we looked at yesterday, the one to the left here and this one here. Need to look at the weekly chart, and you can see that we're back 89% retracement from this high down to here, an area where you could expect some support, weekly support there. And in the 30-minute chart, you can see the decline there as well, just one green bar for the 30-minute chart, and then continuing to move to the downside following those ADP numbers. Very close to the low, unlike the other markets for the FTSE as well, so a lot of weakness around for this one at the moment. And in the currencies, GBP, JPY, you can see yesterday a bit of indecision in the daily chart. So market still stuck in this sideways range. 30-minute chart, we traded up. ADP, we traded down, took out the low, but found support, brought it back to the close. And then now we're sitting at the BRN. But watch this low if this continues to move to the downside. The pound moving up strongly yesterday. You can see the volume there, trading up to 78% retracement. In the intraday, you can see the market trading up to the R3. Like I say, the S3 and R3, 90% of the time the market will stop at that area. It did on this occasion, traded down to the low. As I've mentioned about the low so many times in the alert, they love to bring the market back off the low, and that's precisely what they've done there. And we're currently above the DP and the 50 EMA. And in the US dollar, down yesterday, which is an irony there, because they absolutely monkey hammered silver yesterday on this basis, which is complete and utter BS, frankly, because with the strong employment numbers should be more demand for the industrial side of silver. So let's have a look at exactly what happened. So yesterday you can see smashing the price of silver despite the dollar also moving lower. So look at the 30-minute chart. It's just a way of manipulating the market. Like, we know they've been doing this now for goodness knows how many years, and they continue to do this. Silver down at 22.50 when inflation's rampant around the globe and everything else is 100-200% higher. Silver is still less than 60% of its price in 1979 and 2011. Meanwhile, gold held up well, trading back down to the 200 MA and the 78% retracement. And the 30-minute, you can see that they slam this as well as central banks continue to buy more gold than they have done in history, and prices back above the close. Which brings us to the gold-silver ratio, and you can see the engineered move of slamming the price of silver as the gold-silver ratio moves back to the upside and is up on the overnight as well. So it's going to be interesting to see what effect the non-farm payrolls are going to have on the metals later, if they come out a lot higher than actually forecast at that 224, based on what happened yesterday with the pattern of the ADP numbers. So let's wait and see. Could expect it to be slightly volatile to begin with this morning, then go quiet, wait for the non-farm payroll numbers because of what happened yesterday, and then the activity resume from 1:30 p.m. Okay, that's it for this one. Have a great weekend, and as ever, thanks for watching. See you in the next one.